Hi, Richard Martin here, and it is Tuesday the 7th of September, 3:50 p.m. now, and the news from Oakeshott and Windsor that they are supporting the Labor minority government. The Qatar is with the Libs, but nevertheless it means that we have indeed a Labor government led by Gillard. So how does that impact the markets? Well, irrespective of our Australian market, I thought I'd still start with the Dow Jones Industrial, this trend line starting from April this year. This was the end of the second leg of the bear market. We are now working our way down in what is perceived to be the third. This view would only change in the event that this high was taken out. Nevertheless, this trend line is pushing down. You can see it was hit here in August. The question is, will it be hit again? And if so, it does offer key resistance at 10,500 to 550. The moving average is also in play. You can see how many times that has acted as resistance. And as I say, the key question is whether or not this is going to push down. And if so, our first target is down here at 96.39, and if not, it will push up to a target of around 11,000. So looking at the Aussie market, you can see the impact of the government announcement here on this descending trend line here, which forms the part of a triangle. We've got already a push up after the news was announced. There's a bit of a tail there on that candle, so therefore that the market has received it well. There's only another 9 minutes now to the close of market, but this is likely to I think take the same track as the Dow, and we'll come to that to the targets of what the Aussie market looks like in a second. But you can see that this is really creating some uncertainty here. But I also wanted to point out the correctional nature of this triangle. The three-wave pattern there, followed by a three-wave pattern there, followed by a three-wave pattern up, is very typical of a fourth wave structure, which means that this is likely to fail at some point, and where we may well see that movement to the downside. However, that hasn't happened as yet, and the Dow is the real driver, or the S&P 500 in fact, but we want to see whether that descending trend line from the Dow is broken, and if so, that will of course kick our market higher. Target 4655. I have a 240-minute chart here, a 4-hour chart of the ASX 200 or the SPY. Again, you can see the long tail that's been created as the market has absorbed the news from the election announcement, and it has in fact, based on this one here at this target of 4,586 points, been equidistant of this leg here. So that one means that we have gone up exactly the same distance as this leg here. So you measure that by taking the high to the low and projecting it out. There's the one hit really very clearly, so the market's watching that and it's trading to it. We've come up in a little fifth wave here. The key question is, as we just talked about, is whether or not we get a breakout and we get some upside, and if that's the case, then even though this figure actually differs from the one I mentioned on the other page, 4,712 on the SPY would be a reasonable target, and that would also be in line perhaps with this this trend line. So that's one to watch there. You can see there that if I take this back to a daily, you can see the importance of this trend line, and you can see how the three-wave pattern has been held up here. Well, often these things become, if you like, the kiss goodbye. So look, quite frankly, I wouldn't be surprised to see some upside for this to hit, and then that would complete this particular pattern. Nevertheless, we need still a few days of trading time to determine. Looking at the Aussie dollar and how it's responded to the news, well, as we know, this red line is the weekly reversal. In other words, prudently we should be trading this to the upside and looking for dips, to buy dips as they come down. So this retracement zone here is about the sort of 90.80 to 90.50 mark. Could even come as low as this 90.21, and then we would potentially see some upside. Again, it's all completely linked to what happens on the Dow. First target 92.86, and in the event that broke, which is this double top high over here, that was the the high following the GFC, then we'd be looking to 95.58. Of course, the market will go crazy, saying that we'll be going up to parity up here at 1. But whether that's the case or not, well, we've still got a fair bit of water under the bridge to go. At this point, there's no question that this looks corrective. It's down in 3, it's also up in 3, might come back and away 4th and go to complete the 5th, but we just have to let it unfold. As far as its reaction to the election, well, you can see that the Asian trading session's not far off kicking in now. Certainly it hasn't been dumped. The market is holding up, so it's also operating under the relative strength index here is holding up in the corrective move. So far so good for the announcement of the government. The euro is looking slightly different. This is the mirror opposite of the US dollar. So we've come up in ABC, 3 little waves there. The retracement hasn't been that great, but this potentially could be the end of this pattern, the correction to this 5-wave pattern down. So we've come up to correct it, and now by the look of this big daily activity that's just occurred, it could push down to the downside, and therefore this would start the third of a third, which are always the most powerful. So we would expect highly likely to see 1.2 taken out, and who knows, in the event that the overall markets turn very bearish, this low down here at 1.189 to be taken out as well. But that's certainly not yet. There could be some upside, but it is a 3-wave correction. Just a little bit of time will tell. And important also, the break, or perhaps the short opportunity, is when this trend line here on the relative strength index actually breaks through, as I mentioned on the Australian dollar as well. Gold continuing to hold up, sideways to up. Certainly hasn't taken out the 1255. We've got a couple of dollars up that to hit the 1257. In the event that it does break out, then certainly the record high at $1265 would be taken out. Expected to go up to 1300 or 1303, I think was a prior target. Completing the charts on oil, just to show you that this really has been trading in a bit of a sideways movement here. There is no powerful impulse move to the upside in any fashion that's aligned to the Dow. It has come up slightly since this movement down, this pattern down, but certainly hasn't traced up to take out support at under $80. So that's it from the Market Forecaster. Go online at marketforecaster.com.au to see the charts in more details, and stand by for tomorrow's update. Thank you.